Hi friends, welcome to my channel InfoCraze. Today we will take up a very important topic in accounts, which is journal entries. Whether you are in a school, college or a working professional in the field of finance and accounts, knowledge of journal entries is a must. And the same will be required throughout your accounting journey, as it's the base for all financial transactions. Whether you want to excel in exams or you want to crack a job interview, knowledge of journal entries is a must, and it will be required at every stage of your career. If you watch this video till the end, I can assure you that you will master the art of making journal entries. Before proceeding further, let me request you to subscribe to my channel if not done yet, so that you do not miss out on my future videos. Now let's get started. In spite of learning the golden rules of accounting, many a times people may get confused as to which account to be debited and which account to be credited. In this video, we will explain the process of making journal entries through the modern approach, which will help you to become an expert in this activity. Before we get into the modern approach, let's recall the elements of accounting. You may refer to my earlier video on this topic, where we have explained the 5 elements of accounting. In other words, there are 5 types of accounts in this world, which are assets, liabilities, equity, revenue, and expenses. Thus, if we can find out the journal entry rules for these 5 elements, our work will be very simple. Let's quickly run through the 5 types of accounts with some examples. First is assets. Assets are the resources owned by a company that hold economic value and are expected to provide future benefits to the business. Some of the examples of assets are land, building, plant and equipment, furniture and fixture, computer, vehicle, inventory. Then you can have debtors, cash, then the money kept in bank, investment. You can also have goodwill as an asset. So these all are examples of different type of assets which hold economic value and are expected to provide future benefits to a company. Second is liabilities. A liability of a firm or an entity is its present obligation to others originating from past events that are expected to result in a resource outflow having an economic value. Examples of liability include accounts payable, salary payable, short-term loan, accrued expenses, long-term debt, deferred tax liability, etc. Thus, these all constitute something that a company owes to others. Third is revenue. Revenue is the value of goods and services sold and recognized by a company during a period. Revenue may also include the income that is not directly related to the core business operations. Thus, revenue may be from sale of goods, sale of services, interest income, commission income, etc. Next one is expenses. Expenses for a business are the costs incurred in the process of generating revenue. These expenses represent the outflows of resources that a company incurs to operate and sustain its activities. These may include operating expenses like cost of goods sold, salary and wages, rent expenses, maintenance expenses, and non-operating expenses like interest expense, taxes, etc. Finally, we have equity. Equity represents the ownership interest in a business. It is the residual interest in the assets of a company after deducting liabilities. In simple terms, equity is what the owners or shareholders own in the company after all debts have been paid off. Some of the major components of equity are share capital, retained earnings, additional paid-in capital, etc. As we have gone through the 5 elements in accounting, we will now see the easiest rule for passing journal entries. So here we display the rules for making journal entries. In case of expenses and assets, if there is an increase, you have to debit the account, and in case of decrease, you have to credit the account. On the other side, in case of liabilities, equity and revenue, if there is an increase, you have to credit the account, and if you have a decrease, you have to debit the account. Let's validate these rules with some examples. Assume a transaction, inventory purchased for cash rupees 30,000. In this transaction, 2 accounts are affected. One is inventory and the second is cash. In this transaction, since inventory is purchased, there will be an increase in the company's inventory, which is an asset. As per the rule, we need to debit an asset account if there is an increase. Thus, in this case, inventory account will be debited by rupees 30,000. As the payment is made in cash, there will be a decrease in the cash balance, which is also an asset. As per the rule, we need to credit an asset account if there is a decrease. Thus, in this case, cash account will be credited by rupees 30,000. Hope this is clear and very easy to understand. For next example, let's consider a transaction taken loan of rupees 10,000 in cash from a lender. In this transaction, two accounts are affected. One is cash and the second is loan account. In this transaction, since cash is received against loan, there will be an increase in the company's cash balance, which is an asset. As per the rule, we need to debit an asset account if there is an increase. Thus, cash account will be debited by rupees 10,000. On the other side, as a loan is taken, the loan account, which is a liability for the company, will increase. As per the rule, we need to credit a liability account if there is an increase. Thus, loan account will be credited by rupees 10,000. We will take one more example so that we do not have any confusion. Received a check of rupees 50,000 against sale of services. In this transaction, the two accounts affected are bank balance and revenue. In this transaction, check is received, which will eventually be deposited into the bank. Thus, the bank balance, which is an asset, will increase. As per the rule, we need to debit an asset account if there is an increase. Thus, bank account will be debited by rupees 50,000. As this money is received against sale, the revenue account will also increase by the same amount. So now as per rule, we need to credit a revenue account if there is an increase. Thus, revenue account will be credited by rupees 50,000. Hope you have understood these rules, which are very easy to remember. You may practice with these rules and let me know in case of any doubt. I will be happy to help you. If you have any question, please leave your query in the comment section. With this, we come to the end of this video. If you find this video useful, please like the same and share it with your friends. Please subscribe to my channel for many more interesting videos in the field of finance, accounts and costing. Thanks for watching.